That was great. We're barely through this chapter. We're barely any way through this chapter. Notes receivable. Oh, fun! You have to use a financial calculator. Oh, you know what? You know what's hilarious? In corporate finance last year, I bought a financial calculator, and then I basically completely transitioned to using my graphing calculator because it had a financial calculator on it already. It was easier to use. Oh, and guess what? My graphing calculator now doesn't work. So now I have to go back to using my financial calculator. Great. I didn't know I was going to need a financial calculator for this class. Are you serious? Do I have to go digging through my bag to look for my financial calculator? Unless I can get one on my phone. Maybe my phone graphing calculator has one already on it. Probably not, but I'll check. But even if I do find it, I don't know if I'll know how to use it. How do I look at the apps? They do have a financial calculator. There's a TVM solver. They have all kinds of financial stuff on here. So I guess I could use my phone as a financial calculator. I just don't know exactly how to do it. Dude, are we gonna have to do this in class? Well, at least we won't have to do it tomorrow because this is learning objective 3 or 4. I don't even know which. Learning objective 4 of 4. There are only 4 learning objectives. I'm on the last learning objective, and yet there's like 15 pages left in the chapter. How does that make any sense? Anyways. Wait, what? Hello? They seriously told you to do that when the answer is just $10,000? You didn't even need to do the calculation. Yeah, but you need to do the calculation for this part though, right? How do you do this part? How do you get this number? They didn't illustrate how to get those two numbers. They illustrated how you can get the answer of negative 10,000. They illustrated how you can get this number on a financial calculator. Notes receivable, cash, interest earned. Interest revenue. Notes receivable. Is an asset account. Increased. Jeremiah. Company, oh my gosh, receives a note. They received a note. Oh, crash is debited. Because they loaned money. I mean, they lent. They lent money. I sound stupid. They lent money. Oh, I received a note. So, like, the way they got that was, there's 3 years. We don't know the interest. They gave us the present value, apparently, so then future value is that. Okay, funny. I passed the class of corporate finance. I shouldn't be having problems with this at all. But I wonder if our teacher is going to tell us we need to bring in a financial calculator into class. You would think he would tell us that if we did need one to do these problems. And I totally and completely forgot how to do that because it's been a whole year. Yeah, taking a year off school doesn't exactly help. Okay, discount. Company's report on the balance sheet has a contra asset account to notes receivable. It then amortize the discount and recognize interest revenue annually using the effective interest method. What? A. This times 0.9. B. What the? Y minus 0. Where'd you get the minus 0 from? What on earth? C. C is that plus this. D. What the? Oh my gosh. Oh man. Records interest revenue at the end of the first year. You know what's funny? I think we actually did do some of this stuff in financial accounting. It was like one of the hardest topics in that class. Where's interest revenue? Discount on notes receivable. Interest revenue. Wait, I think I understand this now. The carrying amount of the note. It's $10,000. That $10,000 includes the interest because this is zero interest bearing note. That amount of money includes the interest. Okay. Interest rate. Okay. They say this is a more common situation. Morgan Corp makes a loan to Marie Company. Oh, jeez. Yeah, they just... Three-year, $10,000 note bearing interest at 10% annually. Market rate is 12%. Present value of the principal, present value of the interest, present value of the note. They did stuff on a financial calculator to get those numbers, by the way. Right. Because the effective rate of interest exceeds the stated rate. Oh, you know what's great? Like, I bet there's computer systems that will do all this stuff automatically. Because the effective rate exceeds the stated rate. Present value of the note is less than the face value. Morgan exchanged the note at a discount. Notes receivable $10,000. Discount notes receivable cash. Amortize the discount and recognize interest revenue annually using effective interest method. Cash received, interest revenue. C equals this minus this. Discount amortized. D equals this plus this. This plus this. Okay, and then just repeat. This is going to be the most painful thing ever. Okay, it wouldn't be so painful this would be less painful if I was actually working through the problems. Or if I was taking a little bit more time to think about this stuff. If I had just a little bit more time to think about this stuff and work through it, then it wouldn't be so painful. The problem is I'm kind of rushing through it. But even though I'm rushing through it, it's still taking me forever. On the date of issue, unamortized amount discount is $480. I love how they use the phrase at arm's length, and I don't know what they mean by that. It's not the literal meaning. So normally you receive a note, and in exchange you lend cash. But instead of giving them cash, you're going to give them property, goods, or services. Right? Is that what it means? Stated interest rate is presumed to be fair. Stated rate is... What? Okay, this is for this problem down here for some reason. How far do I have to go here? I'm still not even close to done with this chapter. What? Am I mistaken about this chapter? I feel like it should be almost done with this section. Because they actually have an appendix in the middle of the chapter for no apparent reason. The company measures present value. Okay. Present value of the note is $20,000. The future value is $35,247. Okay. Notes receivable. They're going to eventually receive $35,247. Discount on notes receivable. Is that amount minus $20,000? Land. That's gain on disposal of land. Okay, why do they call that a gain? Wait, Learning Objective 5? Do we not even have to do Learning Objective 5? In our class, we don't even cover that. Now, according to the schedule, it says we cover 1 and 2, 2 and 3, and 3 and 4. 4 and 5 is next week. Never mind, we do cover that. Eventually. All the way into next week. Great. I thought I only had to read 4 learning objectives. That's why my math was wrong. Okay, wait. I will read this paragraph. I will be completely done with learning objective 4, and then that was fine. Yeah, that whole section was pointless. What happened? The Cowboys beat the bank. Are you serious? Okay. Oh, this one's going to overtime. That's pretty cool. Dude. The fun fact is that Cooper Rush has won both of his starts in the NFL. Well, the only game we have left to keep track of is this, and then the Bears game that starts in like 30 minutes. Well, they're at the 59. They might actually be able to pull this off. Dang it. Learning objective 5. Wow. Well, at least we'll have a whole week to kind of work through this chapter in our class. But what, you think I'm actually going to study the chapter throughout that week? Oh, I'm sorry. My brain hurts. Far. I feel like My brain is just deteriorated. That was funny. Over the years, my brain has deteriorated. So now that receives a note receivable from one of his customers for $620,000. Therefore, at December 31st, the fair value of that is that. So we will use the fair value option for this receivable. Now, so now it's a year later. The fair value has risen to $810,000. Now you must report the receivable at fair value. Any unrealized holding gains and losses are reported as part of net income. The unrealized holding gain is the difference between the fair value and the carrying amount. So they have the note. It was originally $620, now it's $810,000. That means they gained money. That was hilariously funny. The notes receivable. The adjusting entry is your notes receivable increases or is debited by $190,000, and the unrealized holding gain or loss income. Really? What the heck? Is credited at $190,000. That was hilariously funny. And the difference any change now another year later, it went down by $10,000. Therefore you have an unrealized holding loss. Reduce notes receivable account. Good job. Disposition of accounts and notes receivable. In order to accelerate the receipt of cash from receivables, the owner may transfer accounts or notes receivables to another company for cash. Oh, yes. Well, dang it. Come on. Why? I wasn't supposed to look at it. The Cardinals have now won. Oh, that's a surprise, because the Raiders were almost in field goal range. And then all of a sudden, now the Cardinals won. I wonder what happened. I don't know what happened there. Dude, the Cardinals scored 16 points in the fourth quarter. And then they scored 6 points in overtime. So they must have gotten a touchdown somehow. What happened? How did they get that touchdown? That final touchdown. I want to know. Come on. Wait. Okay, it seems... Okay, it stopped. The game's over. I don't know how it happened. I'll just have to look it up later. So now, there's nothing to keep track of except for this game, which doesn't even start till 7:20. So now I don't have to look at it anymore. Oh, the Raiders are on 2 now. Stop. Are we almost done? Dude, technically we still have to get to page 37. What is wrong? I don't think that's right. That doesn't sound right. The chapter has to end sooner than that, right? There's no way this section goes that long. I must have been mistaken when I was looking through it. Factor. I love when the English language has a word that has 10 billion different meanings. So I was really confused when I first heard about that. I think my teacher in the federal income tax class actually talked about this in class, and when he said the word factor, I was like, what on earth are you talking about? Because I had never heard the word factor used in that way before. One, the customer places order to a company. Okay, a retailer or wholesaler places an order to a manufacturer or distributor. Then they request a credit review. Approves credit. What is a credit review? What on earth? The company, they ship the goods to the customer. The factor advances cash. 6. The customer makes the payment to the factor. Oh, no, man. That was fun. No, their entire purpose is to allow the company to have cash more quickly, because the customer takes too long to pay, so they want this guy to give them the cash, and then this guy will take the payment from the customer later. That's what it is. Without recourse or with recourse. That's literally what my professor was talking about, but it was in the other class and it didn't have anything to do with that class. Sale without recourse. The seller of the receivable sold the receivable. You assume no responsibility for any credit losses associated with the transferred receivables. The seller debits cash for the proceeds and credits accounts receivable for the face value of the receivables. Recognizes the difference reduced by any provision for probable adjustments as loss on the sale of receivables. Uses a due from factor account reported as a receivable to account for the proceeds retained by the factor to cover probable sales discount. What? This is so incredibly... What is due from factor? What is this? What is this, dude? What is this? That's a receivable. Due from factor is a receivable. So confused. 460,000. Okay. Receivable. Wait. What? Why is the word receivable right here? What on earth? Why is the word receivable right there? Hello? Life? I think that's accounts receivable. Oh, I know what that is. It's just messed up. Formatting. That's accounts notes receivable. Accounts receivable is credited, which means it decreases by 500,000. Their cash is reduced by that much amount. And then there's some other stuff. No, their cash is increased by that, you idiot. Loss is that due from factor. The factor. Okay. Yeah, I think I get it. Oh, jeez. Their accounting statement. Fun. Accounts notes receivable. So they gain this much. They lose the cash, and they interest revenue. They make this much on interest revenue due to customer credit tax. Yeah, I think they made a formatting mistake up here. They should have had this receivable down here, over here instead of over here. Whatever. Oh my gosh. Their journal entry is exactly the same both times, but this one is different. Okay, my brain is not comprehending this section right now. Oh my goodness. Oh, shit. This is so wonderful. What does this mean? Okay, so basically, the bank lent $500,000 to Howard Mills Incorporated. So if the loan is not paid when due, creditor can convert the collateral to cash or collect the receivables. Why is... Oh my gosh. The company debit cash. So they received a loan that was worth, apparently, it was a $500,000 loan. The interest expense is this. Notes payable. Notes payable. Now what? Collection in March of $440,000. Wait. What's going on right now? What's going on? Cash interest expense notes paid. Wait just a minute. Wait just a minute here. Cash. News cash, interest revenue, notes receivable. Yeah, but how does this have anything to do with the accounts receivable of Howard Mills? Because, oh my goodness. Collection in March. Oh. Wait. On March 1st, collection in March of $440,000. It says collection in March of $440,000 of accounts, less cash discounts of $6,000, plus receipt $14,000 sales returns. What? Why is this? Now I'm confused. Plus sales discounts. What? Rebated March collections plus accrued interest. Okay, I think I have to read the explanation. There's got to be an explanation. Come on. Really, you have like 2 sentences. You barely explained what was going on here. When a liability is debited, the liability decreases. hate myself. You decreased. In the final entry there, in the final entry, the accounts receivable account was decreased by 246,000. Why? Can you explain this? Oh my gosh. Oh. Sale. They're saying they're comparing, what they're doing is comparing the sale of a receivable with the secured borrowing practice, which I'm still so confused by right now. Hey, please stop getting useless notifications. Like 70% of my notifications on my phone are completely useless. I don't care about them, but I can't turn them off. Ouch. Because I don't know how. Some notifications I just don't know how to turn them off. Well, embarrassing. Should have started. Well, it doesn't say it started yet, but it was supposed to start at 7:20. Oh, it actually has started. It just didn't update. Anyways, hate myself. Should've gotten back here. If the sale of receivables does not meet the sale conditions. What does that make? What does that mean? Does not meet the sale conditions. If it doesn't meet the sale conditions, that means what? If sale accounting is appropriate, it must still consider assets obtained as and liabilities incurred in the transaction. Transfers receivables, does it meet the three conditions? If it's so, is there continuing involvement? Yes. Record as a sale. If there is not continuing involvement, if it's not meet, then it's recorded as secured borrowing. The liability recorded as expense. Please. Presentation and analysis. What? Now what are we talking about? How are we still like 9 pages away from the end of the chapter? How? General rules in classifying receivables are: segregate the different types of receivables that a company possesses if material appropriately offset the valuation accounts against the proper receivable accounts. Determine that receivables classified in the current assets section will be converted to cash within the year or the operating cycle, whichever is longer. Disclose any loss contingencies that exist on the receivables. Disclose any receivables designated or pledged as collateral. Disclose the nature of credit risk inherent in the receivables, how that risk is analyzed, and assessed in arriving at the allowance for credit losses and the changes in reasons for those changes in the allowance for credit losses with respect to additional what the disaggregate. Yep, that's a word. That means something. Oh yeah, I think wasn't that a ratio in the last class I had? The last class I had this ratio, was right? I have no idea. I could be completely wrong about that one. Dude, it's already been a whole hour. I oh well.